Hello. Prices have been mixed this week, so let's see what has been driving the market in some more detail. Oil softened on Monday, with Brent closing the session down just over $1 a barrel day on day. Prices were pressured lower as 2 additional rigs were added to the US operational rig count. Prices retraced some of Monday's losses on Tuesday as the API reported US inventories fell by 5.5 million barrels last week. Wednesday's session was bearish and front-month Brent lost close to $1.50 per barrel. This is despite the weekly EIA report showing a decline in stocks of 5.6 million barrels. Inventories of distillate and gasoline increased, which indicated a slowdown in US fuel demand. Prices were bullish on Thursday, and front-month Brent closed last night at $62.25, and that's down $1.62 on last Friday. Prompt and near-term contracts posted gains on Monday as expectations of a cold spell were heightened. National Grid revised its demand forecast from Friday onwards when temperatures were forecast to fall. Curve contracts initially took their direction from the prompt. However, bearish oil prices took the lead and directed prices lower. Tuesday's session was similar to Monday, with prompt and near-term contracts rising and longer-dated contracts easing. All contracts eased on Wednesday as the system was heavily oversupplied. Demand forecasts were also revised lower, and as a result, the system was long throughout the session. Near-term contracts rose once again on Thursday as temperatures were forecast to fall, 2.5 degrees C below seasonal norms. Curve contracts were mixed last night. Near-term contracts closed higher than last Friday. January and February 18 each gained a penny per therm, whereas longer-dated contracts closed lower, with winter 18 losing a penny a therm. Gas prices directed power on Monday, and as a result, near-term contracts rose, but the curve shed value. Wind generation was forecast to rise from Tuesday, which provided downward pressure to prompt prices. Weak coal prices also provided downward pressure to curve prices. All prices fell on Wednesday, directed lower by weaker gas prices and expectations that a number of French nuclear reactors would return to operation following scheduled maintenance. Most contracts were range-bound on Thursday. Near-term contracts closed higher than last Friday, while seasonal contracts from summer 18 onwards all lost around 80 pence per megawatt hour. You can download this report from our website. Thank you for watching, and we'll see you next week.